Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. And today, what a volatile market. Nifty opened 150 point gap up. Other markets were higher, but none of the market was so significantly higher. So we opened 150 point gap up and then continued to move another 150 point. So it is 300 point from yesterday's closing. Then what happened towards the end of the day? Almost 150 point wiped out. Just look at the price action. Last Thursday, high was 18,100. Last Friday, low was 17,500. That means a 600 point fall. Then yesterday, the low was 17,450. In fact, it was lower than that. And today high is 17,950, which is 500 point up. So Thursday to Friday, 600 point down. Monday to Tuesday, 500 point up. So taking a total swing to 1,100. And this is not counting the intraday swings here and there. So markets, like how in 1 month, the Nifty should move 400, 500 point. Even that is also very high because, even 400, 500 point per month, translates into 5,000 to 6,000 point in a year, and which is about 1/3 of the market cap. But these markets, just in a matter of 2 days, 600 point down and 2 days, 500 point up, 1,200, 1,300 point move. That is almost 10% move, making in just matter of few days. So markets are just too volatile to handle, and markets, been moving very, very violently between 17,400 and 18,100. There is a reason for this volatility, and number one, and people see, India completely differently from other countries. So there is some macroeconomic picture, it's working in favor of India. But at the same time, the global cues and Europe and US especially, they're getting bad, I would say bad to worst. So in fact, today afternoon, Europe market opened. They opened about 1% higher. And that's why we moved even further higher towards 17,950. But then from plus 1%, now the European markets have come to minus 1%. So every rise is an opportunity to sell in European and US markets. So that is how those markets. So it is understandable. Tomorrow is a Fed meeting. So ahead of the Fed meeting, the European and US markets are so jittery. And when European markets started falling, so we also started falling. So this volatility, is making, option selling a very, very difficult proposition. So nowadays I do buy options, looking at the open interest and other things. So yesterday I told you there was a huge addition of open interest at 17.6 PE and 17.5 PE. Even I could not believe, but you see what happened today, and all those people who sold those options have made very good profit. But even today, even after 150 point correction from intraday high to low, and in fact today at the end of the day, Nifty future has become discount to the spot price. That is a kind of selling. And FIIs are still holding heavily short position. But despite that, there was a huge addition of open interest at 17,800. Nifty closed around 17,800. 17,800 put option as the highest open interest and added highest open interest today. So huge open interest added from 17,800 to 17,500, and there was hardly any call writing. And in fact, there was an unwinding of call from 17,600 to 17,900. So that looks, the picture very, very bullish. And, Bank Nifty is once again today went very close to the previous all-time high of 41,800. And, IT stocks also recovered. and more importantly, Reliance started recovering. So all this point to a bullish picture, but again, all this bullish picture, can continue only if global markets support. So the global markets are becoming more and more bad. So at some point of time, we will also be coming into selling pressure. If we are not coming to selling pressure, at least, the markets will be hugely volatile. So anyway, for the next 2 days, so fingers crossed, market is looking for US Fed event. So yesterday, I just suggested TVS Motors, and today the TVS Motors has shot up like anything. And not only TVS Motors, I think the entire auto pack has done well today. And today the best performing sector was Pharma Sector. Pharma stocks were higher by about 3%. And there is a huge addition of open interest. In two stocks I'm going to discuss. One is Cipla. And Cipla is a long-time underperformer, and now it is doing very well. And Cipla added huge open interest in the F&O segment. So if markets are good, because if you look at the US markets, right now the US futures are lower only, but for the last two trading sessions, the US markets were lower, but in the last 1 hour, they recovered. Right? So today also, who knows, something can happen, because all the people, ahead of the Fed policy. Of course, Fed policy comes during the market hours. They can still maintain some kind of a stop loss, but still some people will like to square up their positions. So if they're holding short position, if they square off, the market can go higher. And I don't know, because by looking at the price action in US and Europe, I think there will be more shorts than longs. So if US markets, close positively tomorrow morning, and then we continue our uptrend, and then Cipla is definitely one stock to watch tomorrow. Another stock, in fact, I wanted to mention yesterday, but somehow I feel that it is already, it's already too hot to handle, very hot. Then another stock is JK Cement. I think for the last 1 to 2 months, the entire cement stocks have been doing very well ever since Adani came into cement business. But particularly JK Cement is having huge open interest on the long side. So for tomorrow, the stocks to watch is Cipla and JK Cement. So other than that, it's a usual thing. We have to see the bank Nifty, banking stocks, IT, TCS and Infosys, and then Reliance, So these are all heavyweights, so that decides the Nifty. So I'm recording this video much earlier because I'm flying to Delhi. So I don't have the data of FII. Maybe one last time let me check. So we wouldn't know. But by looking at the price, action, so I think FIIs should be buyers in cash market, and domestic institutions should be a big seller because of 150 point fall in the last 1 hour. So let us see when the data comes. We'll discuss the rest tomorrow morning. Hope you enjoyed watching this video. Thank you for watching.